Leaders of the world's biggest banks have descended to Davos, Switzerland for the latest World Economic Forum. Let's bring in one of those leaders of the world's biggest banks. That's BNY CEO Robin Vince. Robin, good to see you here. Appreciate it.
Great to be with you, Brian.
Look, I think we're taking a lot of information from the new Trump administration. From a banking CEO perspective, what are you most optimistic about? Because we've seen a big run in financial stocks. A lot of optimism is priced in. What are you hopeful that this administration gets done?
I think it's terrific and this isn't just in the US, we're seeing this from other governments around the world as well, but to see a government that's really focused on growth and being able to make the economy everything that it can be. Because ultimately, as one of America's leading banks, we're focused on helping our customers to be able to grow and thrive. You know, that's what our platforms are all about. We provide platforms to really help clients navigate capital markets and the financial world broadly. And I was in Japan a couple of months ago, and you can hear the story from them as well. They'd like to try to recapture growth. They haven't had much for 30 years. Here in Europe, they've got real growth challenges. The UK government from just 6 months ago, they haven't made their progress yet. These things take time, but they've put that at the top of their agenda. And so hearing from the Trump administration that is really their number one goal, I think it's a great time and moment for businesses to be able to partner with government, help make all of that try to come true.
I talked to your counterpart at Bank of America, Brian Moynihan. He struck an optimistic tone of what the administration might do on the Basel III endgame. Long story short, might roll that back. More capital could be returned to shareholders in various forms. Are you hopeful that program gets rolled back, and what does it mean to a company like BNY?
Look, I'm more focused on having a stable, level playing field. I think the lesson that we've learned over the past 15 years is banks have added a lot of capital, banks have added liquidity, the regulators have done a terrific job making the system stronger. Now we have a strong system. Let's go out and use it for the very purpose for which banks are created, which is to be able to help grow and help clients and individuals be able to be successful. And so we've got to be able to put that capital to work. Will we return things to shareholders if we need to? Sure. But would I prefer to be putting it to work in the business? Absolutely.
Are you concerned that we go back to 2006, 2007, things just get too loose and there's too much risk in the system?
I actually am not that concerned about it. We have to be vigilant that doesn't happen. We need a strong, healthy financial system. We're one of America's largest banks, and we've seen how the strong banks have been able to actually help the system over the course of the events through COVID, through what happened with some of those regional banks a couple of years ago. We've been a force for strength in the economy, and that's actually the role that we should be playing. I'm not worried about the return. I'm looking forward. I'm thinking about the innovation. I'm thinking about the investment. I'm thinking about helping to make economies grow and our clients be successful.
Does looser regulation, potential looser regulation on banks this year, does it mean, can you draw a straight line to more M&A activity, higher capital markets business? Is that how investors should be thinking about what may come from the big banks this year?
I think it's about safe and predictable from a level playing field point of view for regulation. Like that. Declare victory. The work has been done. Banks have been invested in sort of the safety. That's terrific. But now we've got to look forward. And so, is M&A possible? Absolutely. That's a healthy, thriving capital market, includes M&A. But what matters more than anything else is that we're able to help our clients be able to grow. You know, it's our clients who want to be able to participate more. They want to be able to invest more. They want to be able to borrow more. We're a capital markets organization. So when capital markets grow, BNY can thrive.
There's a consensus forming, at least amongst the folks that I have talked to here, tariffs equal inflation. Are you on board with that? Because I think it would have direct implications for what the Federal Reserve may do next on rates.
I think it's more complicated than that. Tariffs are and always have been a tool of trade policy, and the president's made it very clear that he wants them to be used as part of trade policy. And I think if you put tariffs on top of everyday items that Americans are consuming, that they go to their local store, grocery store, or home goods store and buy, they can be inflationary. But at the same time, tariffs well applied can also make US businesses more competitive. And so we'll have to see how all of that unfolds, but I think it's how they're used that's going to determine the answer to that question.
In that type of environment, can you rule out a rate hike from the Fed this year?
I don't think anybody should rule out anything.
Yeah,
when
especially
it
in
comes
this
to the
environment,
future.
right?
Of course. And we're risk managers. It's our job to be prepared. It's our job to be agile. We've seen administrations since before the founding of the nation. Our first administration was George Washington's administration. And so you've got to be able to work with Congress, with the incoming administration, with regulators, and you've got to be able to adjust. And the same thing's true on rate policy. Do I sit here right now expecting the Fed to hike? I don't. Is it possible? Of course, anything's possible. Do I think they're on pause? Probably for a little while. Let's see how the inflation plays out. They've been on a medium-term track, getting it in the right direction. Does it need a couple more rate cuts? We'll have to see over the course of the year. But overall, I think the Fed's done a terrific job these past 2 years in terms of being able to kind of grapple with the issue and have an economy that's actually thrived through it. Remember, that was not our expectation 2 years ago, that they could go through a rate hiking cycle and be able to have the type of thriving economy that we've actually enjoyed over the course of the past couple of years. But they have to finish the job on inflation.
Lastly, I remember I was talking on my opening big podcast about crypto. You sounded optimistic about crypto when we talked. Are you more optimistic now based on who the Trump administration is? We may have a crypto czar now. We seem like crypto regulations will be looser. And does BNY want to play a role in the community?
Well, we've said this for the past couple of years, and we've been consistent and we haven't changed our point of view on this, which is digital assets represent a new, interesting, innovative technology, which we think could be important to the financial system over the course of the next 10, 20 years. Exactly the twists and turns along the way, we'll have to see. But we've been investing. We've got the ability to custody crypto assets, digital assets, but also we're looking into the interesting smart contracts, ledger capabilities that the underlying technologies represent. And so we think there's an interesting future here, but AI as well. Remember, it's not just about digital assets. It's about how does technology get applied to make the financial system better, more agile, more capable, and able to grow. And AI is going to be an important part of that story too.
So true. All right, we'll leave it there. BNY CEO Robin Vince, always good to see you. Good luck with the rest of WEF. Appreciate it.
Likewise. Thanks,
Thank
Brian.
you. Appreciate it.